Which is the best dividend stock to buy? Is it Walmart, Nordstrom, or Lowe's? I'm going to answer that question in this video looking at these three dividend stocks across different uh, financial metrics, you can call them, starting with the dividend yield. So let's begin. Walmart offers investors a dividend yield of 1.12%. Lowe's offers investors a dividend yield of 2.1%, while Nordstrom offers investors a robust dividend yield of 4.95%, a solid high yield dividend stock. The next thing I wanted to compare these three dividend stocks on is annual revenue growth going back a decade. And looking at this metric, I can see fluctuations in terms of the leadership in revenue growth. And in the most latest year, I have Walmart at 6.73% revenue growth, Nordstrom at 5% revenue growth, and Lowe's at 0.84% revenue growth. All three of these three dividend stocks are not fast growing companies, and it would be reasonable to assume these three dividend stocks will grow revenue in the low to mid single digits, looking at 3 to 6, maybe 7% for the long run, right? You're not reasonable to expect these companies to grow revenue much faster than that. The next thing I wanted to compare these three dividend stocks on is their operating profit margin. And this metric shows a clear leader in Lowe's having the highest operating profit margin, moving in the right direction at 10.47% in its most recent trailing 12 months, followed by Walmart at 3.34%, followed by Nordstrom at 2.99%, and moving in the wrong direction over the long term. You can reasonably expect Lowe's to continue in leadership in this financial metric because it's got a strong competitive advantage in its business, protecting it from outside players, and there's limited competition in its industry, the home improvement industry. When I mean limited competition, I don't mean that it has it easy against Home Depot, its main rival. What I mean is that they're not competing fiercely to gain customers. They're not offering discounts, promotions, coupons, and other incentives to try and steal customers away. More so, they're competing by means of who can better serve their customers, increasing ability of execution, logistics, operations, things of that nature, and not slashing prices to attract customers, which are hurtful to profit margins, which you see more often in industries where Walmart operates and where Nordstrom operates. So, for that reason, I like Lowe's long term operating profit margin. Finally, I wanted to compare these three dividend stocks on their valuation, and I chose to use the forward price to earnings ratio because it simplifies things the most, and it's arguably the most comprehensive valuation metric in looking at the earnings as the denominator and the market price as the numerator, and going out 1 year in terms of the earnings expectation, accounting for what analysts and management thinks their earnings per share are going to be over the next 1 year period. And incorporating all of that, Walmart among these three dividend stocks is the most expensive at a forward PE of 22.15. Next is Lowe's at a forward PE of 13.32, and the cheapest is Nordstrom at a forward PE of 7.73. If I was to pick one of these three dividend stocks to buy today, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. I would pick Lowe's as the best dividend stock to buy out of these three. I like Lowe's better operating profit margin. I like the industry that it operates in the competitive fierceness of the industry. I like its valuation, and I like its potential to increase its dividend payment over time. For all those reasons, I would pick Lowe's as my top dividend stock to buy here. All right. Thank you so much for watching. I really appreciate your viewership, and I really hope you'll come back again and watch another one of my videos.